All right. Hello, everyone, and welcome to another edition of This Week in Crypto. If this is your first time here, this here is a weekly panel where Sentiment team and community members discuss recent crypto market events from a fundamental perspective. And we talk about interesting market findings and insights that we have kind of discovered using Sentiment's data, metrics, and indicators. So if you haven't used Sentiment before, I strongly suggest you check out sentiment.net. Basically, what we do is we develop tools and custom metrics, including on-chain social media and development indicators, all with the purpose of helping you better understand the crypto market, behavior of its participants, and become a better informed market participant yourself. So anyway, the link to sentiment.net will be in the description of this video, as well as a link to our Discord. So if you like what you hear today, if you want to join in the discussion, maybe even become part of the discussion in one of the future calls, let us know and we'll find you a spot. So today, we usually start with Brian, but today we have a special guest, Joel John. Hey Joel, nice to meet you via the wonders of technology at least. So Joel has jumped on the call to discuss one of his recent articles using some of Sentiment's data and the findings that he was able to unearth. So Joel, if you want, I think Brian is already sharing his screen, and you can go ahead and just jump into the analysis whenever you're ready.
Sure. I think, Brian, could you scroll a little higher up, because we can start with the largest 100 wallets. So I have been using Santiment to study how users behave within Ethereum, and primarily I was trying to see where the largest value capture was currently. So a large part of studying any network is understanding what amount of tokens do the 100 largest wallets hold, and that's the first sentiment, is that if you just plug it in with sand sheets, you can just give in the slug of the project and you can get that data in a matter of actually less than 10 seconds. And what I found with Ethereum in particular is that at its peak, almost 40% plus of Ethereum was held by some of the large wallets, including exchanges. But the number's been slowly declining over time. And for me, that indicates that the project slowly but definitely attaining maturity. One way to study networks is that as it grows, the concentration of tokens in the largest wallets decreases over time. And that was something that was quite obvious when I put together the chart for concentration of tokens in the top 100 wallets. The other insight that I could grasp with Santiment for this piece was the runway some of the large ICOs had. Brian, could you scroll a little? So I think what I noticed is that if ETH price is not rally, and I think this number is likely higher, stayed at around $180. It should the largest ICO wallets had only about $500 million between them, and what that meant is a year where all teams would have to crunch together to ship and to get product market fit. And they would also need to raise from external backers in the coming year if their runways cut short. So it's a little grim picture when you look at it from that angle, because we've already been seeing a number of VC-backed startups shop. What's really going to do is we're going to have these hyper lean companies with an explicit focus on commercial aspects, trying to catch up with blockchain companies in terms of KPIs so that they can do their follow-on rounds, which, to make a long story short, means this year is likely one of the most exciting to be in this industry, because, quote unquote, you could say, taking price action aside, it is like being able to be at the bottom of the market and get your bets right in terms of what you bet. The other and most important insight you could say that I had from this was that the GitHub activity on ETH is what some of its peers have right now. So if you actually pull up the GitHub activity for ETH and compare it with, let's say, Litecoin or EOS, or even you would likely see that ETH has had a sustained developer activity versus some of the other networks. I wouldn't want to explicitly compare it with Bitcoin because it's a far more mature network. You could say that a large amount of work in it is done in the core product itself, and now you have the associated innovations that are coming up. But what it really showed was that when both talent and capital is not as intense as it used to be in 2017, activity is still strong in ETH. Interesting for me to observe. So I think the cool thing about Santiment and especially Sand Sheets is that I could pull out in a standard CSV format in like a couple of minutes. There's a minor learning curve in terms of learning these functions, but once it's done, you have like terabytes of data that's set in a productized format that you can pull in a matter of minutes, and I think that's really cool.
Thanks a lot for presenting, Joel. Well, first of all, where can people read the full analysis? On your website, right? Do you want to plug it for a sec?
Yes. Yes, it's on my personal blog at decentralized.co, but I'm actually creating a number of pieces that would soon be on Santiment itself for the audience there, because I've been spending more and more time with the core product, and I thought it just makes sense to put out some of the insights that I generate on Santiment's insights feed itself.
Awesome. Okay, well, first of all, anybody else have, before I jump in, if anybody has questions for Joel, let me know now, because I do a few of them as well. Okay, let me start then. So definitely, this isn't really necessarily a question as much as an agreement. So I've actually been looking at charts for among Ethereum whales myself, and I'm just gonna jump in, Brian, and take over your screen for a second.
Sounds good.
Yep. Just so I can show. So I've been actually looking at this for this meeting as one of the sort of interesting patterns. So if you go to sand data, so what Joel has been doing, he's been using sand sheets, which is, you can find it at sheets.santiment.net, which is a plugin of ours where you essentially you can get all of Santiment's data directly imported into your own Google spreadsheet, and with a few basic functions you can import and backtest a lot of different strategies or just data points for all of the coins in our database, be it on-chain data, social data, financial or development activity data. But we also have, based on this same data set, we have developed a lot of our own metrics. So one of the things that we've developed is this dashboard showing the top holders of various coins, including Ethereum. So I was looking at the top 100 holders for Ethereum, basically the top 100 addresses holding Ethereum over time. And so the same thing that you have kind of found on those within the first part of your analysis is pretty much what I've been seeing recently happen with Ethereum as well. So now, for example, on this chart specifically, you can see the green being the price of Ethereum over the last 6 months, and then the blue being the percentage of total supply owned by non-exchange wallets within the top 100, right? So you can see that even within, so this is a bit of a shorter term trend. If you look at the last 2 years, you can kind of see this exact sell-off that Joel has been talking about. But on a micro scale or on a short-term scale, it also seems like we've been recently seeing whales offloading ahead of this rally, which is kind of interesting, especially because if you look at the same, so if you jump in between non-exchange wallets and then exchange wallets, so we're currently looking at the cumulative percentage of Ethereum's total supply held within the top 100 exchange wallets, or the ones that we know are labeled as exchange wallets. You can see that their cumulative balance and the percentage of total supply that they own of Ethereum has been jumping from, let's see, 7.1% of all Ethereum in mid-December to now 8.5%. So that's a pretty steep incline. Like you can see it here if we look at the overall balance rather than the percentage of total supply. So it goes from, within the last month and a half, it goes from 7.85 million ETH in exchange wallets to 9.4 million ETH. So this is what 1.6 million Ethereum added to exchanges over the last month and a half, whereas we're seeing sort of a opposite pattern, at least among the non-exchange wallets. So a bit of a, while I agree that on a long-term scale, the decline of holdings by the top 100 wallets definitely bodes well for the project, and in general, I think is a sign of maturity. And we have done some analysis in the past, Jan has particularly, where he's looked at the differences between distributed coins and concentrated coins, especially based on these two charts. So, and what we have found is that the coins that have more of a distributed network, or their coins are not really concentrated as much within the top 100 wallets, tend to perform better. Some sort of a network effect probably in action. So I think this is probably indicative. The same thing is probably what we're seeing for Ethereum, or will be seeing, but on a short-term scale, it also kind of seems like whales aren't, or the biggest non-exchange addresses aren't necessarily in the process of accumulation over the last couple of weeks and or months. So that's the first point I just wanted to make. Joel, anything to add there?
No. I think things like coinage or token age would be quite interesting to look at this in this context. I think it's quite interesting how price and token concentration is so strongly correlated, and we have the tools to really track it in real time.
Yeah, and we can look at the coinage a bit later, because it's a big beast, the token age consumed this specifically. But also, I just wanted to real quick go into.
Sure.
Yeah. I wanted to go into refer to the final part of your analysis, which is the development activity of Ethereum. And so on app.sentiment.net/labs/BiddleHeroes, you can kind of get a sense of where Ethereum's development activity is compared to other projects. Let me turn off the multi-charts. So here, for example, you can see the development activity of Ethereum versus the development activity of EOS. And if we take a longer view, let's say, for example, the 1 year view, I think the difference can be the difference between the two projects that are still at least somewhat being compared as the competitors in terms of smart contract platforms, dapps. As far as the development activity is concerned, Ethereum here for the last year has started from 49 points. This chart is kind of, let me see, I think we've done some changes to it, so it looks closer than it actually has. But if you look at the numbers, so it's 5,000 for Ethereum and then 89 for EOS. So I think we've done some updates to the platform. So these dips and the relative numbers look closer than they actually are. But if you look at the absolute numbers, like 7,300 for Ethereum and 184 for EOS. So the actual difference is humongous between the amount of development activity being conducted on Ethereum versus its, well, quote unquote, the biggest competitor in terms of smart contract platforms and dapps.
We're seeing percentage change here, by the way, Dino. That's why it looks so close. But if you actually put them on a linear scale, like Dino just said, it wouldn't even be close.
Oh, okay. So we've changed it to percentage.
Yeah, I think the EOS line is using a right axis that just isn't showing at the moment. But the reason they're close is because it's actually just showing the percent rise and falls over time. Whereas as you highlight those numbers, it's like a 20x or 30x difference between Ethereum and EOS.
Yeah, I mean, you can also look at the yearly report that we wrote maybe a month ago. And so here is a better view, right, of a yearly or actually 2-year scale of the development activity of Ethereum versus the development activity of EOS. So in absolute numbers, this is what it looks like. Much, more significant discrepancy being presented here. So yeah, very much in line with what Joel has been able to find.
And here, by the way, I think for Ethereum development activity, what we mean is not people developing on the Ethereum itself, but building different dApps on top of Ethereum.
Oh, yes,
including
correct. Right,
all
right,
kind
right.
of projects that are building on top of this platform. So it's just it's pretty much like 30x difference between the two.
Yeah,
like
yeah.
30 times more activity on Ethereum compared to EOS.
Actually, yeah, thanks for reminding me of that, Val. So actually, yeah, Val is right. These charts don't show the development activity specifically for Ethereum versus specifically for EOS, but rather the development activity of all of the dApps on Ethereum versus the development activity of all of the dApps on EOS, right, Val?
Yeah, exactly.
Yeah.
And we also compare that to the DeFi space as a kind of something like to compare it to. And I think even the whole DeFi is like larger in development activity compared to EOS. So yeah, like on the multi-chart too, you can see the correct axis.
Yeah.
So for DeFi, it's I think it's the green one, right? Yeah.
Yes.
It's something like around 500, and EOS is a kind of 100 or something like that. So it's like 5x difference between EOS and DeFi, and 30x difference between EOS and Ethereum.
Yep. So basically, guys, what you're seeing here actually is the cumulative development activity of different projects on different platforms. So the cumulative development activity of all dApps on Ethereum versus the development activity of all dApps on EOS, and then the cumulative development activity of all DeFi-related projects that we track. So you can see that even just the DeFi sector itself is recording more development activity compared to the likes of EOS. And I think, Val, I saw a few days ago on our Discord that you were also kind of playing around with the number of actual contributors to different GitHub repositories. Is that right?
Yeah, we have this metric for a number of contributors, but currently it's only available in our API. So it's not available in this studio product.
Yeah, but just based on the few links that you shared, I also saw that just the amount of contributors, for example, for Ethereum versus something like Bitcoin and Bitcoin Cash is maybe 5 or 6x. Although I do agree with Joel is that it's kind of hard to compare the development activity of Ethereum and Bitcoin given the time scales and half-lives of both projects, and the general sort of maturity between them.
Yeah.
Yeah, so these are the two things that I kind of wanted to leech on a bit about your analysis, Joel. But in general, very interesting and something that kind of validates my own standpoints on both of those points. So thank you once again for presenting. And guys, the link to Joel's full analysis will be in the description of this video. And I'm also looking forward to reading it on insights.sentiment.net once Joel kind of makes parts of his analysis available there as well. Okay, so let's move on then.
Thanks for having me, guys.
No problem, and thank you very much for joining us. And as soon as you have any sort of additional analysis based on our data, I really enjoyed reading your stablecoin analysis as well. That you published a few months ago that also kind of tapped into some of our data. So please come again as soon as you have something. And stick around while we talk if you want. You might find some of the other things that we've kind of prepared for today interesting as well. Some of it also drawing from sand sheets. Okay. In that case, Brian, I will let you take over and go ahead with what you have kind of prepared for today. I'll stop sharing my screen and you can go ahead into your prezo.
Sounds great. And once again, Joel, thanks for your great submission, man. We're definitely looking forward to the next one. And as I go through my stuff, feel free to chime in. I know we've talked about NVT here together, and we're always interested in guests like yours' opinions on the types of models we put together. All right, can you guys see my screen? Okay.
Yes.
Beautiful. So I'm gonna make this just a little bigger. We've got a pretty big update as far as our token circulation NVT model goes. So
that's a green line, huh?
Yeah, for the first time in 8 months, we are seeing a semi-bullish signal coming across. Granted, this is 7 days worth of data. So we're looking at, or actually 6 days, excuse me. We're on our 7th day right now. So that data doesn't come in until about 12 hours from now. So we're looking at 6 days of February data, which is showing us that token circulation compared to market cap is actually at a much higher rate than it has been since June, when we got the same colored signal. And on a 1 to 5 scale, with 1 being the most bearish and 5 being the most bullish, we are at a 4 right now, meaning more than likely, based on history, if we look at this, the average return when we are in semi-bullish territory is 21% per month, plus 21%. And this is basically what we've seen over the last 4 to 5 years since this model started. We can easily go back with the few days of non-bullish token circulation. But as of now, as you can see, yesterday was an extremely strong day. And you can actually validate that by going to our SAN data here and seeing yesterday's data was close to a 6-month high, and today so far is looking the same way. So anytime you'd like to check in real time, even before a complete day has finished, you can actually see what today is looking like. And we're seeing basically a continuation of yesterday. So unless something changes in the second half of the day here, we'll probably see another hash in the range of here. And basically what I'm saying is we are on our way forward with prices in Bitcoin. And when Bitcoin is moving forward, most other coins will follow suit. Ethereum obviously has been actually gaining ground on Bitcoin in terms of percentage, as well as many other altcoins. And if we went over to the Ethereum side, give it just a moment, we're actually seeing that we're still in bearish territory. But keep in mind that this has to be taken with a grain of salt, because as I just said, everything tends to be pegged to the price of Bitcoin, and Ethereum is riding up basically due to other factors besides what's happening with the token circulation right now. Do keep in mind though that Ethereum does have pretty tight correlation to what we're seeing with the signals. So if you base it on this without concerning other factors, you might want to consider that we are at a temporary top as far as Ethereum versus Bitcoin's ratio. I wouldn't say that this necessarily means that the overall price of Ethereum versus USD or whatever other currency you use is at a top. But as far as Ethereum versus Bitcoin's ratio, we might have seen an overextension as far as the difference between the two tokens. So Bitcoin may be the better option in terms of this model, but keep in mind there are obviously many other ways to measure besides NVT, and we can't solely base it on token circulation.
But still, these are, sorry, Brian, can you go back to the Bitcoin chart? So I just checked. Bitcoin, for the past 7 days, Bitcoin is up 4.98%, so almost 5%. So the fact that we're also seeing not just the increase in price, but a more significant increase in token circulation, or the amount of unique coins moving on a daily basis compared to the price of Bitcoin, which is what NVT calculates, is pretty remarkable. So usually, you'll see these green blocks or pillars sometimes when the circulation or the amount of network activity starts ramping up as the price goes down. But this is the price going up, but the amount of activity on the network going up even more in order to push the NVT ratio into bullish territory, which is quite interesting, actually.
Yeah, that's exactly right. And you can see from past months here, take March, our most recent midterm bull run, we had a red signal that was showing that we weren't getting enough token circulation. You can see it justified these little trend lines here Whenever the bar is over all 4 of those trend lines, that's as bearish as you can get on this model. And then going into April, it fell below 3 of the 4 trend lines. The only one it didn't fall under is the all-time NVT here. The others are 6-week, 11-week, and 16-week trend lines, respectively. And as soon as it dropped under 3 of those 4 lines, the prices just surged, and we went all the way up to 13.7 as a high before it went back into bearish going into July. And wouldn't you know it, that was where the top was, and we immediately started declining. Now, we actually had a bearish signal in January, and this one's a bit of an outlier because it was an all-time high month in NVT, but toward the very end of the month, and actually kind of the mid to late month, started to really pick up, and we almost hit 10K, got to 9,500, and so far we're basically seeing a justification of what happened last month with the NVT signal that we're seeing this month. So it really is interesting. And if we got into the bright green territory, which we last saw in December 2017, which was the best percentage return month of our recent memory, unless you go back to 2010, 2011, that's when things will really start to pick up and be justified by this model. So it's something to look out for. We're going to be watching the next week here very closely to see if we're getting signals in the range of what we've seen in the last day, or if things start to trickle back toward what they were about a week ago, which was still in bearish to semi-bearish territory. So very interesting. And if you're looking for justification on price movements, strongly recommend checking out this model to see whether prices are moving at the same rate as token circulation, or whether there are some divergences being formed. Any other thoughts on this model here, guys?
No, just that it seems to be a big paradigm shift, so to speak. So this is for the last 6 days. So I'm looking forward to the next week's call to see how it holds up.
Absolutely. Yeah, our first non-bearish signal in 8 months is a pretty big deal. So we'll see if it holds.
Actually, can I just jump in? Jan, so we also have Brian, you also have a spreadsheet for this, right? Our price DAA divergence spreadsheet.
I do.
Let me
open that up.
Have there been any sort of signals this week that we might want to take a look at as well? So basically, what we try to track in this template is the times where the price of the coin is going in a direct opposite fashion to the network activity or the amount of daily active addresses. So these sort of divergences can be both sell and buy signals, but especially if the price keeps going up but the network activity starts going down, this can usually be a bearish indicator, or has proven to be a bearish indicator in the past. But given that there has been both an uptick in price and an uptick in token circulation, I would assume that none of the signals have triggered over the last week or so, but just wanted to make sure.
Correct. Yeah, based on the thresholds that we use that have had the best backtest results, and I'll credit to Jan for making this model, we aren't seeing anything triggering any thresholds over the past couple weeks. The last time we saw slight divergence was in early January when we really started to push forward. And I think because December was such a daily active address month, it trickled. There weren't many being formed in early January despite prices rising. And then as prices rose, I think a little bit of FOMO kicked in and turned us back into a neutral signal here. No more red signals happening once around the 14th or 15th hit. So interesting here, but what we really look for are big bunches like this in red or big bunches like this in green to really tell us when things are getting overheated or underheated respectively.
Yep.
Yeah. I should just add like especially for Bitcoin right now, the DAA is also really rising. So that kind of matches. So you could say really like the fundamentals do support this kind of rise. I just looked at Grafana. DAA for Ethereum, not so much. So maybe there could be some kind of a sell signal coming up, but yeah, not so far.
Yeah, and this is Bitcoins. You can see what Jan's talking about. The daily active addresses here have been kind of on a steady rise since late mid-January here.
Yeah. Not super clearly, but it's definitely going up. Yeah.
Yeah, there's certainly no divergence there. Like there are frequent sort of circular or cyclical dips, I assume, during the weekends. But other than that, it seems to be trending upwards along with the price. So I'm not surprised that we haven't had any signals fired just yet. But that being said, if we do keep seeing the price of Bitcoin start to chart new highs or try to test the 10K mark once again, and then vice versa, we see this amount of network activity start to dwindle a bit. This might cause our models to, go into bearish territory and start flashing red.
Mm-hmm.
Yeah, exactly.
Cool. Thanks, guys. I'm going to show one more thing here, and then I'm going to hand it off to you, Dino, so you have a little time to go over anything on your end. So I introduced this model here a couple weeks ago. This is a representation of what top holders, the top 10 to be exact, have been doing with their tokens over the past 30 days. And this auto updates, so for any subscribers out there, it's simply a matter of opening this link and you will see it update once per day and show what has been happening for the last 30 days here. The dashed black line is Bitcoin's price. Everything else represents the percentage changes in what the top 10 holders are doing with their total supply, both on-chain, on exchanges and off exchanges. The gray one, which you see here most prominently, has been fluctuating pretty rapidly as of late. This is representing DAI, which is a stable coin that's often associated with Ethereum. And as many of you know, over the past week, Ethereum has been on the rise and one of the leading, not leading altcoins, but toward the top, considering its presence as the second largest market cap token. It's been a very profitable investment. So what we're seeing is a lot of fluctuation in DAI, which we can see better if we highlight off-exchange activity. The gray here, once again, is DAI, and we have seen it really rise over the past few days. And I've noticed a bit of an inverse correlation in what top holders are doing with their DAI compared to Bitcoin and Ethereum's price here. Now, we're only looking at Bitcoin's right now, but Ethereum's is more or less a slightly more volatile and slightly more rising version of this black line that you're seeing. And on the 18th, right around the time things ended up coming to a halt after a very strong beginning and middle to the month, and you can see here that was where the top came in temporarily, and then after a lot was taken off, it went right back up. So there was some sort of activity here where they sold off, or at least took off the top from off exchanges, and then immediately had it back on for about 10% difference, which is massive. And then we saw another mini spike here for off exchange activity to the tune of about 3% just a couple days ago. And right after that happened, the following days, yesterday and the day before, really saw a spike in Ethereum's price, as well as Bitcoin's to a smaller extent, as you can see here. So I find this very interesting, and I'm still getting to know the off-exchange activity and its relation to some of these tokens. But in terms of DAI, I think there is definitely some telling statistics here for anyone who wants to check it out and explore, both on my model and on Sand Data. Besides that, we have mostly seen flat activity for most altcoins. One exception would be REN. And you can see REN here represented by the light green really had an uptick on February 1st and 2nd. And I actually have it highlighted so we can see what happened on the first and second. Right here is the uptick in their total wallet, and right around the first, second, third, that's when prices started to really rise for Ren. And many of you may say this was just pegged to, Bitcoin's price, because that was when Bitcoin started to have its surge above 9,000 and now up around 9,700. But if you actually looked at them comparatively, Ren had one of the best single days right around the fourth, fifth, sixth, was really outpacing most other altcoins. And I do think that the top holder activity that occurred right around the beginning of the month had something to do with that. So very interesting, and I'm continuing to monitor what these ERC-20s are doing. I may add others to the mix, and if you have some suggestions for ERC-20s that you would like this model to track, without trying to get too cluttered, because once we get up to the 20 to 30 range of projects on the same axis, it becomes a little bit too noisy. But interesting stuff here, and I think watching the top holders, just like NVT, which I showed earlier, is a really good way to track what might be coming up in the markets as a leading indicator. And that should be it from my end. So Dino, if you'd like to go over your stuff from here, I will hand it off to you.
Yeah, very interesting that you mentioned Ren, because I had Ren as one of the things that I wanted to kind of just quickly go over today as well, because Ren has actually been one of the top ERC-20 gainers over the last 7 days or so. And it's done so despite a bunch of different top signs, at least from a fundamental perspective. But before I go into that, I also just wanted to jump in and piggyback a bit on top of what Brian was saying about the activity of DAI. So just a few days ago, we published this article showcasing the biggest top 10 of the biggest ERC-20 coins in terms of network growth over the course of January of 2020. So what I mean by network growth is the amount of new addresses that have interacted with these networks. And we can see a pretty telling pattern, especially within the first or top 4 coins, as well as here for TUSD. So 5 out of 10 of the biggest network gainers, so to speak, in terms of ERC-20 coins over the first month of 2020 have been stable coins, which kind of goes to show that despite the rise in use cases for Ethereum dApps, the biggest use cases kind of remain the combination of speculation on one side and DeFi on the other. And it's also very interesting to see this sort of concentration of stable coins growth in January, right around the time that Bitcoin also started breaking out. And we've seen in the past, we've discussed kind of the possible correlations that we've been seeing between the on-chain activity of the Tether coin, stable coin in particular, and the Bitcoin's price action. So very often when we see the spikes in on-chain transaction volumes or tokenage consumed for Tether, there are correlating volatility markers on Bitcoin's price charts as well. So just wanted to also showcase that this also might have been a precursor to what we've been seeing with these bullish indicators on Bitcoin as well. And speaking of bullish indicators, I'm very happy to be joined by Valentin today, because I wanted to go over something that we have been talking about oftentimes on these calls in the past as one of the very reliable top indicators in the past, and it has happened again for only the 4th time in the history of Bitcoin. We have seen Val's MVRV long short difference go above 0%. So Val, I don't know if you noticed this, but I just noticed it this morning. I was looking at it because I talked about it last week, that it was starting to trend, like it was going downwards, but it started to pick up again. And now it's at 1.26% again. So do you want to just briefly, for people that are unfamiliar with this metric, kind of explain what it shows and what we have seen it do or precede in the past?
Sure. Yeah, I haven't noticed that it crossed the zero threshold and now it's positive. But let's first describe what we're looking at here. So there is this metric called MVRV, or market value over realized value, that was introduced a while ago. And what it basically tells you is it looks at all the wallets on, let's say, the Bitcoin blockchain, and looks at what price the Bitcoins that are sitting in these wallets entered the wallets. So if somebody acquired Bitcoins I don't know, 5 years ago, most probably he acquired these coins at a much lower price. And comparing this to the current price, we can estimate that what is the current profit of this person that acquired the tokens 5 years ago. So when we do this across all wallets on the whole blockchain, we can get an idea of what is the current profit or loss that the whole network is having compared to the current price. Now, the original metric was defined like that, and that's cool, but the original metric doesn't account for cases where, for example, somebody was, I don't know, mining Bitcoin at the early days, and then he lost his private keys. And these were coins that were basically acquired at a zero price, and then they were sitting in a wallet for like 7 years. So what we do here is we look at only a particular time frame in which the coins moved. So we developed these time-bound MVRV ratios. And for example, here we look at the 20-year MVRV ratio, which is looking at all the coins that moved within the last 20 years. But we also have a version which is like a 3-year MVRV, which looks at only coins that moved in the last 3 years. And this gives you a more, I believe, a more accurate view on the whole picture, because it accounts for like lost coins and stuff like that. So with the long-short ratio, what we look at is we compare the MVRV ratio of old coins, let's say coins that moved within the last 3 years, move within the last, let's say, 90 days. I don't remember which exact thresholds we take for this ratio, but the idea is to compare.
Yeah, I think it's 365 and 30 or 60 for the long-short difference. Just to
yeah, something like that. But the idea is to compare coins that moved within the last, let's say, 3 years with coins that moved relatively soon, let's say in the last 60 days. And we can think of these two ratios as long-term holders versus short-term holders. So the short-term holders will be traders that acquired some coins, they withdraw them to their cold wallets, and maybe within 1 or 2 months, they're going to move them back to exchanges and sell them. While the long-term holders will be people that are going to buy these Bitcoins and then hold them for 1 or 2 years before we sell them. So what we observe when we compare these two things, and this is the long-short difference, is that during bull runs, the long-short difference is becoming very, very large, which means that the long-term holders are at much bigger profits than the short-term holders. And this kind of makes sense because during a bull run, the bull run is going to finish when the long-term holders start to dump their cheaply acquired coins on the market. So when enough people are convinced that, okay, I'm at enough profit, I want to sell right now, then the bull run basically is going to end. The market is going to be flooded with cheap coin. While on the other end, when we observe a bear market, then usually the long-term holders are at loss, and the short-term holders are the ones that are going to profit. These will be like day traders and generally people that are observing the market more and trying to extract money out of it. So the pivoting point is when this difference becomes negative or positive. And it seems that it kind of marks large cycles in the market. So during the last bull run, what we observed was this threshold was crossed around a little bit less than $6,000, and then the price quickly reached 13,000, and then it started to go down. And we observed this short bear market where it reached what was the negative value, the biggest around -7%. So that was like a small bear market during this time, and now it seems to be crossing again. So what this indicator tells us is where we are in the market cycle right now. If we are in a very negative territory, around -30, -40%, this historically has proven to be a great time to buy. So every time we are in negative territory, like the risk should be lower when we talk about buying Bitcoin. But every time we are in a larger positive territory, for example, during the last bull run that was like above 40%, like 50 or 60%, and during previous bull runs that were much more crazy, we saw this ratio actually rising to like more than 100%. Then we know that the risk is very high to buy. So it's much better to sell at these territories. So this indicator gives us a kind of a macro view of where we are in the market right now. And it seems that according to this indicator, the bear market is kind of finished at this point, and we are switching to a bull market. And from here, we need to observe this ratio and see if it's going to reach some higher values. So what I would say that if we see this indicator reaching levels like 40 or 50%, then we will be in a very good sell territory. Because historically we've seen this ratio to be becoming more, to becoming less volatile. So the extremes will be smaller. In the early days of Bitcoin, we can see that this ratio is reaching some crazy values, and it's going to be reaching smaller and smaller ones, at least on the top side. On the bottom side, it seems to be around, like the minimum seems to be around -40%. On the top side, it seems to be reducing over time. So yeah, so the bull run in 2017, it reached like how much? Almost 100%. Then the bull run from last year, it reached like 60%. So I would expect something like 30-40% for the next one. So we'll see.
Really cool, Val. I noticed the same thing with the crosses being more and more frequent over time. You'll notice, between 2012 and about mid 2014, we didn't really see any crosses. That was pretty much the only one. And now, I mean, we had a dip below zero just a couple months ago in December, and many of us thought that might last. And it ended up being very temporary and then coming back up, then going below again just a few weeks ago, and now, changing its mind. So it's very interesting to see the push and pull of how this long short difference is fluctuating. And the numbers that you're mentioning, the plus 50% being a top and negative 40% being a bottom, still seems to hold true, but on a less volatile basis. So I think this is a great indicator.
Yep.
It's a more of a long-term one, and it's a kind of a, like we don't really know at what levels it's going to reach, but it kind of gives us a good orientation where we are in the market, and is it like a good time to buy or sell. So right now we are in the middle, so still not, it doesn't seem to be overvalued, it doesn't seem to be also largely undervalued. So at that sense, I mean, it's still like, we're going to see where it's going to go. But right now, the risk is like 50-50 pretty much.
Yep, and it definitely the flattening of the charts is what I find the most sort of notable, is the fact that we definitely see, the volatility on the charts slowing down over time. So it's it's not surprising that the bottom here was around 6.5%, or actually 7.5%, whereas last time it was 36%, and then the time after that it was like 40. 44, and then so yeah, in the future we might see smaller values be indicative of the similar behaviors, and it's also interesting if you look at the overall, so the time bound MVRVs for different sections of users, as Val mentioned. Like if you look at all of them, currently all of them are in profit. So let me just show you real quick. um, at the moment, all of the different Bitcoin holders, irregardless of when they have entered into money, so to speak, are currently in green. Whereas a few weeks ago, that wasn't the case. Like when we were discussing Bitcoin's MVRV ratio for different holder categories a few weeks ago at the beginning of January, we could see that the long-term holders were kind of starting to suffer a bit. So you can see minus 10% for people that have held Bitcoins for at least 365 days, and then minus 7% for those that have, for the coins that have moved in the last 2 years, minus 4% for the coins that have moved in the last 3 years, where short-term holders were still kind of fairly well off. But now with this latest push to 9.7K, we're seeing pretty much everyone being in the green again. And the extreme values, as Val mentioned, both in terms of MVRV long short difference and the general MVRV metric, usually good times to buy to sell the coin, because it's indicative of a rising sell pressure and people accumulating or gaining more profit to their initial investment. The problem with the metric is not really knowing what the top is going to be, which extreme value they are, how comfortable they're going to be, or at what levels are they going to be comfortable with the ROI on their initial buy in order to start dumping the coins. But at least what we can see historically is that this extreme value has also started to flatten out a bit over time. So keep an eye on this, both in terms of the MVRV ratio for different Bitcoin categories of holders, as well as the MVRV long short difference. And another thing that I just briefly wanted to look at, because I also found it interesting, is our social sentiment data for Bitcoin, specifically on Twitter, because this data was trained on Twitter data. So over the last, let's say, half a year, I think that I was looking at it. Currently, the sentiment towards Bitcoin is at an 7-month high or something. So let me just show you real quick. So what you're seeing here is you're seeing the sentiment volume consumed, so to speak. So I know it kind of sounds weird and not really self-explanatory, but essentially what this chart is trying to calculate is it's trying to show the difference between the positive and negative sentiment towards Bitcoin on Twitter discussions. And then it's also adjusting those values for the amount of social chatter overall, because it's not the same if there's a lot of positive sentiment but not a lot of talk, and then a lot of talk but not a lot of positive sentiment. So this chart is trying to adjust or weigh the sentiment for a specific coin based on the amount of social chatter overall. So you can actually see very positive sentiment for Bitcoin on Twitter over the last, so what is this, January 27th? Yeah, so over the last two weeks, it's actually approaching the levels that we saw in the late June, the 2019 top. And actually, if you look at the total social volume for Bitcoin, you can see that compared to the June tops, there's less chatter overall. So this would essentially mean that given that this top is higher than, or actually kind of similar to this one, there's less chatter than there was in June, but there's a relatively high positive sentiment towards Bitcoin relative to June. Overall, something also to keep in mind, because these extreme values for in terms of the both negative or positive feelings toward coins have also been indicative of major shifts in price action. But for now, there seems to be quite a bit of green or bullish signals for Bitcoin on our charts. Not saying that this is what is going to happen long term, but currently this is what our charts are showing, or the fundamental data is sort of showing. So one final Bitcoin related metric that I wanted to look at is token age consumed. Oh, we're already an hour in. Okay.
We started at about 10 after, so I'd say another
okay.
5.
Yeah, a bit more. Cool. As Joel mentioned during the beginning of the call, coin age destroyed or token age consumed is one of our metrics that is very telling of short-term behavior of users. So basically, for those that are unfamiliar with token age consumed, what the token age consumed does is it puts more weight on the movement of coins that have been idle or that have been dormant and passive for longer amounts of time. So essentially, spikes on the token age consumed graph, like this one or this one, indicates that, in this case for Bitcoin, indicates that somebody that has, or multiple people that have been holding Bitcoin for extended periods of time have started moving those coins. So the reason why token age consumed exists and why this metric has kind of been put into the foray is because the premise is that people like veteran traders are not weak hands. So when they start moving coins, they are usually doing that either based on extensive research or just insider knowledge on how the market is going to react. So we can see just recently, so I wanted to look at the last two spikes, last 2 weeks. So we can see the biggest spike over the last 3 months in token age consumed came right before this bottom here. And then there was another massive spike just today. So actually, barring this one, we saw the second largest spike in token age consumed for Bitcoin over the last 3 months. So what this might mean is, up for debate. In general, what we have seen usually is that these spikes in token age consumed aren't necessarily either bullish or bearish signals. There are more signals that heightened volatility is coming to the coin. So if you look at or compare the spikes in token age consumed over the last few months, many of them have come at the very bottoms or at the tops before the consolidation phases, and then bottoms again. So right here before the dip, right here before the rally. So in general, it's not enough to say, a spike in token age consumed is going to mean either green or red for the next, green or red candles for the next X days or hours or months. But the fact that there has been this uptick in the movement of old Bitcoin over the last few weeks is definitely something to keep an eye on, so to speak. So that's one of the other, Bitcoin related things that I wanted to cover. And then finally, Brian mentioned Ren, and I was actually looking at two. So I was talking with Max about one of my insights recently that has proven not to be correct. Oh, okay, we have an intern. So we might be doing something on our insight. So basically, can you guys still see my screen? Yeah?
Yeah, we can see it.
Okay. Seems to be something at the moment being worked on insights. But basically, I wrote this insight about Engine, ENJ, where I was talking about how its current fundamentals are sort of indicative of a forming top. So over the last 6 months, let's look at Engine. So I was talking about it here, right? When there was this spike and then a corresponding dip in daily active addresses and just other, network activity metrics, that we have seen these sort of same divergences between the on-chain activity and price activity in the past correlate with price decreases or price declines. However, even though I in general thought that given the spike in on-chain activity and then a correlating or actually a quick descent into network activity, even though the price kept rising, which is usually a bearish indicator, I thought Engine users or hodlers should definitely be keeping an eye, because we have seen this being a top formation for a lot of coins in the past, but it wasn't. Since then, I think Engine has gained almost another 50% or so. And this is not the only coin that this has happened to. So if you look at Ren, I think we'll see, let's see. Yeah. Oh, this we've already have it loaded up. Yeah, so I think we'll see a similar sort of formation. So maybe not as prominent, but Ren has also been gaining steam over the last week or so, and there has been this correlating spike in daily active addresses, and then a very telling dip in network activity. Same with network growth, as well as different metrics like transaction volume, on-chain transaction volume, and daily circulation. So we have seen these sort of big moves on chain, as well as in terms of social chatter around the coins, that are usually indicative of tops that have not been able to stifle price growth. So Max's theory on this is that this is indicative of a bullish sort of territory for all altcoins, whereas what usually would have contributed or have been enough selling pressure or lack of network activity to kind of start driving the price downwards, given the general or macro market conditions. Even though we are seeing the same patterns that were once proven bearish, the fact that they are now no longer enough to lead to price declines can be considered a sort of a precursor or an indicator of the general bullish market condition. So one other coin that I saw this on is Status.
Quick, Dino.
Yep.
Before you change, I just wanted to say these spikes that we're seeing on the 2nd, 3rd, 4th of the month, they correlated on the exact days that we saw the uptick in top holder activity. So I'm wondering if there might be some correlation there as well.
So what were the days?
The February 2nd, 3rd, 4th.
Yeah.
The spikes that we're seeing universally on all these charts you're showing. So I'm wondering if they may have something to do with it. They could provoke others to create daily active addresses, or they have some influence. But I'm curious on how they might relate.
And if you also look at, so if you're wondering what, okay, what Brian is saying is that we have seen a spike in the top 100, I think, wallets for Ren, right?
Top 10. Top 10, yeah.
Top 10. Okay, so we have seen them offloading their balances, right?
The opposite. No, they've been increasing their balances on the second.
Okay, cool. So basically, we're seeing a correlating spike in transaction volume, and if we want to look at where these coins are going, there's more coins being sort of transacted and transferred on the network, but where are they going? You look at the exchange flow balance, or the total difference between inflow and outflow of coins to exchanges, and you can see this massive spike in exchange funds or exchange flow, basically meaning that a lot more Ren are moving into exchanges than outside of exchanges. Given the inflow of coins to the top 10 wallets, I would not be surprised to say that, or to see that these 10 wallets are mainly exchange wallets, and that the amount of coins that are being moved is mostly due to a rising price. So there's a rising speculative activity, and many more coins being moved to exchanges to take advantage of the price action. So usually, what we have seen happen around these types of events is a corresponding price decline in the next few days, simply because the sell pressure is very often not enough for bulls to absorb and leads to a price correction short term. However, we have not seen this happen neither for Ren nor for Engine, or in case for Status, that I wanted just to quickly go over as well, because Status has also been one of the top performing coins in the last week. So we have seen the same thing. So there's been this spike in daily active addresses, and then a corresponding decline, which usually should drive the price downward. And it kind of started to, but there was another sort of rise, even though the network activity has continued to decline. So once again, we are seeing these new sort of events on the charts, whereas usually you would consider them fairly bearish. I think Max's theory, at least, is given the overall market conditions, this is no longer enough to drive the price downwards, which should be an indicator of general bullishness in the market. That even these fundamental indicators are no longer enough to account for corrections on the market. So these are the final thoughts that I wanted to share with you guys, and now we're just about an hour in. So yeah, any sort of comments or additions before I close these discussions, guys?
It's definitely worth noting that Status is a frequent mainstay in Dino's top ERC-20 developing activity projects.
Yes, for sure. Status has been, if our insights load right now, but generally what we've been doing every month is based on our GitHub activity data. We have been looking into the top 10 coins by the ERC-20 coins by development activity over the past month. And you can see that Status was the second highest or the second most active ERC-20 coin in the past month. And I think it has been within our top 10 ERC-20 projects monthly sort of development activity reports every month for the last year or so. So Status is definitely a project that has been investing a lot of development time and resources into its project. And I'm not saying that this is the reason why it's finally starting to burst. I think a lot of coins are currently kind of experiencing their own rallies, but it's definitely something to keep in mind on that. The reason why it's one of the top performing coins, you can see 43.34% gain in the last 7 days, might have something to do with the general updates to the platform that they have been making. And for those updates and exactly what they are, you can check out our insight, where I've talked to people from Status and they have kind of let me know what they have been doing and what they have been working on recently. So that's going to be it for today, guys. I want to thank everyone, and Joel especially, for joining us for today's edition of This Week in Crypto. If you, as I mentioned, like what you've heard today, check out santiment.net so you can kind of start looking at exploring some of these metrics and indicators yourself. And also join our Discord, where we talk about these sort of things on a daily basis. And if you want to kind of contribute to this discussion or have some ideas about what you would like us to cover next week, let us know and we'll be sure to accommodate. So until next time,